It's not like there's a risk of the split failing or it's a corporate action that could have a negative effect on their long position. Jack, thank you so much, man. Good stream, good content. I have my better days. 3 hours in, I realized I'm on yesterday's stream. No wonder the price action looked different. GameStop can't require shares to be recalled. They have no control over whether shares are recalled or not recalled. They're not their shares, right? It's a public company. Can you explain the difference between MM and ETF FTDs and where T+6 comes into play? It's actually not T+6. We use T+6 because it covers the entire range. It's T+5. If T+2 for the trade settlement, T+3 for the locate. This is AP, ETF APs. T+6 just covers the following day. Because technically this settlement period extends until at its latest T+6. And then, so you have T+6 at the beginning, and then if the shares are marked long by the morning of the 6th day, then they get an additional 35 calendar days for Reg T. And then at the end of this, there's another 2, depending on the ETF, 2 to 3 days of ACH cash settlement. So basically, if they're cash settling these FTDs with the ETF, and the ETF is then going to the market to buy the shares back, they have 2 to 3 days to transfer that cash. And so we see something that, kind of ends up like T+9 plus 35C. Although doing the T+9 at the initial point is inaccurate. It actually does have to be T+6, and then you have to do 35 calendar days. Then you have to do an additional 3 business days. But this does mean that on the final day, because you're using T+6, not T+5, the final day for settlement is the date that you end this on. So there is no morning after. And this methodology produces the most accurate result for ETF FTD covering. This consolidation can continue, and it does look like we are seeing some downside to it, right? So we are seeing some downside to this consolidation. It's possible that it could drag on long enough for us to end up in this like 126 range at this low support. So remember, this is our BU LPS line. This should be a very strong support, and it has been, and we tested it again today. But it's possible if we continue to consolidate to the downside that we will see, support here at this lower level, which is acceptable for phase D. If we fall below this by more than 3%, that's generally considered a shift back into phase C. So a movement back into this phase, or even, phase B, depending on how far below that level we drop. If we continue to drop back below this support, that's a move back into phase B. But right now, yeah, very much on track, but I think consolidation will drive lower. So if you're looking for cheaper entries, they may be a little bit further out from now. And if we do adjust our model here for the daily for this longer time frame, it definitely looks better than whatever the high is today. We'll have to determine if today is even really another bounce, honestly. But it looks like it could be, and we're holding this trend. I think there's a longer term trend as well. The further we get out in Wyckoff, the longer these should take, because volume drops, right? So volume should be declining, which it is, right? We're seeing volume decline. And so, these bounces, these breaks to the upside from long interest driving up, exceeding short interest. So this entire period should be an accumulation of long positions. So new longs should be coming in, and old longs that were people that were long here should be repositioning, right? And so on the low tests, there should be institutional interest. And so what you'll see is, you see the price get driven down to lows, and then, all of this selling is being bought up by institutions, which causes a bounce, right? And so our lows should be marked by strong bounces, relatively strong bounces. But as volume does decline, the frequency of these peaks is going to spread out. So initially they start very quick, and then they should start to kind of like that as you get normalization across the range. I think that's the right way of putting it. In TradingView, how come the extended hours button in the lower right-hand corner of the chart disappears on daily interval or longer? You can't look at extended hours on daily interval because the candles are 24 hours. Do all stock splits require share recalls, or do split recalls only happen like 50% of the time? Thanks. It depends on the stock. Usually you get a share recall with a stock split. Most stocks that split recall, you'll see share recalls occur. Tesla to 934 end of next week. I fucking hope not. I mean, it'd be good for my covered calls, but it'd be really bad for the market. When is the next OPEX cycle? I think it's still in just May. And based on some of the things we're looking into right now, it really doesn't look like the cycle has shifted so much as they just shifted their obligations for the cycle. And that makes sense too, because again, if we look at the amount of covering done in this cycle, from a low of 86 to a high of 200, versus November or August where we only saw like a $40 run. It really does seem like this is far greater obligations occurred during this cycle than the previous ones. And in reality, we should expect these to be declining, right? Over time, the force and volume behind these cycles driving down over the last year, right? And then with this cycle, almost as pronounced as our June cycle. Very close, right? Far greater than August or November were. So it's interesting. But it definitely looks like they've accumulated more obligations into the covering here in March than we saw in the last two previous OPEX quarters. And that might have been viable because they probably offset some of their obligations here in February. So, they covered a little bit here. This wasn't just us running up for no reason. They did cover a little bit here into Feb OPEX, but minimally, right? They still left a lot of obligations on the table. And this was probably done in a manner to facilitate the pushing of those obligations out to March. So, they reduce their requirements here. That gives them some extra time. Then they cover everything here during the S&P rebalance.